Welcome to the Maximize Business Value podcast. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition their business on their terms. Our mission was born from the lessons we've learned from over 100 business transactions, which fuels our desire to share our experiences and wisdom so you can succeed. Now here's your host, CEO, Mastery Partners, Tom Bronson.
Hi, this is Tom Bronson, and welcome to Maximize Business Value, a podcast for business owners who are passionate about building long-term, sustainable value in your business. So you're a business owner, and you know that every business on the planet will eventually transition. Wouldn't you prefer to do it on your own terms as opposed to have those terms dictated to you if something unfortunate happens? Well, if you're that business owner who really wants to maximize value and eventually transition your business on your own terms, you found the right place. This episode is part of our series from our latest book, the Maximize Business Value Playbook, 65 specific actions to dramatically increase the value of your business. You can find it on Amazon if you don't already have one. Today, we're on chapter 21, execute buy-sell agreements. Now, if you have more than one shareholder, it's vital to execute a buy-sell agreement. Buy-sell agreement is a legally binding contract that stipulates how a partner's share of a business may be resigned if that partner dies or leaves the business. Now, this type of agreement may also be known as a buy and sell agreement, a buyout agreement, a business will, or a business prenup among the primary partners. Now, being a business partnership is a lot like being in a marriage. In the beginning of a marriage, everyone is typically happy and content. Over time, however, there will be conflicts. And unfortunately, sometimes those conflicts lead to a point where the marriage or the business relationship just needs to be dissolved. Now, a buy-sell agreement provides a legal way to settle those conflicts in a manner that is agreed upon in advance. Now, a great example of conflict comes when one partner is committed to the business and giving 100% to it, while the other is tired or burned out and contributes very little. Now, without a buy-sell agreement, those partners who may already be at odds now have found common ground to settle a dispute, have to find common ground to settle a dispute. Now, it makes sense to devise a way to settle matters like this in the beginning when everybody is happy. Waiting will result in trying to create a way to resolve the issue when the partners are already at odds. Now, a good buy-sell agreement will specify a formula in advance for how to value the business. So when one partner dies or wants to leave or needs to leave, it's easy to determine the value of the business. Now, there are no standard methods to assess the value of every business, so the shareholders must agree on a valuation method in advance. Now, there are several options. You can do a multiple of earnings, a multiple of revenue, fair market value. That's a term used by the IRS for certain types of transactions. Fair value, which is very different from fair market value. You can get an independent valuation or any other calculation. In my experience, it's far more likely to have an agreement on those valuation methods when the partners get along after a conflict could trigger after a conflict or a trigger event. Come on, Libs, keep up with me. Over time, it would be prudent to reevaluate the valuation method in a buy-sell agreement. Look, the market fluctuates, and what may have been valid 10 years ago may no longer apply. In cases like that, I've seen buy-sell agreements that allow the buyer to establish their price and offer to buy out a partner. And if the other partner does not agree with the value in some agreements, those offers that come in will allow that partner to purchase the business from the first partner at the same price. So buy-sell agreements may contain other exciting clauses like puts and calls or rights of refusal. These are not particularly complicated, and a competent business attorney will advise you on the language to a proper buy-sell agreement in the language that it should contain. Now, buy-sell may also require a funding mechanism. Most commonly, that's life insurance in the event of death of a partner. Now, for that reason alone, it's essential to understand the value of the business so the insurance can cover the cost of the transfer of that stock. Buy-sell insurance is typically very inexpensive term insurance, which is usually paid for by the company. The company then uses the proceeds from the insurance to purchase the stock back into the corporate coffers of the deceased partner from their estate. By the way, when that happens, then the surviving partner, their value increases, or the percentage of ownership increases because the treasury has purchased back that stock. And other times, each partner can have buy-sell insurance on the other partner, then you personally buy the stock. Either way, there are ways to handle that. So it's vital to have a trusted financial partner or an insurance professional on those matters to ensure that the situation is not overinsured or underinsured. My 3 recommendations this week for the maximize business value is, number 1, if you have a partner or a key shareholder and you don't have a buy-sell agreement, find a good business attorney and get one. Even if you're at odds now, get a good buy-sell agreement. Number 2, agree on valuation method in advance and review your existing buy-sell agreement annually. And number 3, go to the Maximize Business Value YouTube channel and watch the You Are Not a Unicorn webinar replay. You'll love that. Now, next week, we're going to cover re-examining your tax status. Now, that is a really important topic. If you ever plan to transition your business, don't miss it. This is the Maximize Business Value podcast, where we give practical advice to business owners on how to build long-term sustainable value in your business. If this is your first Maximize Business Value podcast, then there are more than 180 episodes just crammed with valuable information, just like this one, just waiting to be downloaded wherever you found this podcast. Go download them today. So until next time, I'm Tom Bronson, reminding you to pick one thing, just one thing, to dramatically improve the value of your business, and do it today while you maximize business value.
Thank you for tuning into the Maximize Business Value podcast with Tom Bronson. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition on their terms. Learn more on how to build long-term sustainable business value and get free value-building tools by visiting our website, www.masterypartners.com. That's master with a Y, masterypartners.com. Check it out.
That was perfect. I wouldn't make any changes on that.